What if I told you that Britain didn't conquer the world with soldiers? Not with guns, not even with kings or empires. It did it with money. Yes, money. It's the same piece of paper you might throw in your wallet, the same numbers that flicker across your bank account. Once built the most powerful empire in human history, and more than that, it created a system so cunning, so powerful, that it allowed a small island nation to dictate the flow of global trade, finance, and even war. But here's the mystery. Most people think Britain's empire fell because of war, rebellion, or overreach. What if the real story was financial? By the end of this video, you'll see how a tiny island leveraged banking, credit, and clever debt to dominate the globe, and how the same patterns are quietly repeating today. To understand this story, we have to go back to the 17th century, a time of chaos, revolution, and opportunity. England was nothing like the empire you imagine in the 19th century. It was a fractured island, recovering from civil war and political upheaval. Kings were weak. The nobility was wary, but what England had was vision. Visionaries who understood that wealth wasn't just coins in a chest. It was trust credit contracts. Numbers on paper that could be moved faster than any army. And so, slowly, a financial system began to emerge. The Bank of England, established in 1694, was not just a bank. It was a war machine disguised as a lender. The government borrowed money from private investors, promising returns, and then used that money to fund wars, fleets, and colonies. This wasn't just borrowing. It was a revolution in power. It allowed England to fight wars without bankrupting itself immediately. While other countries, France, Spain, Portugal, were still tied to gold and silver, slow and vulnerable. Before Britain, Europe had tried to dominate the seas, but most empires relied on treasure from colonies or war loot. Portugal mined gold in Brazil. Spain raided the Americas. The Dutch traded spices for profit, but their reach was limited. Britain's innovation was to combine finance with military strategy. Every pound lent, every bond issued, every stock floated wasn't just an investment. It was a weapon. Take the South Sea Company. It was founded in 1711. It promised to manage government debt and finance colonial trade. At first, it seemed like madness. People invested, the stock soared, and eventually crashed spectacularly in the South Sea bubble of 1720. But here's the twist. Even this disaster strengthened Britain's financial system. Lessons were learned, regulations refined, and the culture of credit, the belief that debt could be trusted, became ingrained in London's SDNA. By the mid-18th century, Britain wasn't just trading goods, it was trading promises. The rest of the world was unwittingly financing the rise of a global empire. The 18th century was Britain's financial golden age. War after war against France, Spain, and the Dutch was funded not by treasure chests, but by bonds sold to the public. One of the most shocking numbers, by the 1750s. Britain had borrowed over £140 million, an astronomical sum at the time, almost entirely from private investors. That debt funded fleets that conquered Canada, India, and the Caribbean. But Britain didn't just fight wars, it also mastered trade. The financial networks it created allowed merchants to move capital across continents faster than ever before. Ships carrying sugar from the Caribbean, cotton from India, and timber from North America weren't just goods. They were part of a vast financial web that enriched London's banks, merchants, and investors often more than the crown itself. Even more ingenious, Britain used finance to influence politics abroad. Loans, bonds, and trading privileges became tools of diplomacy. Want access to British markets or investment? You had to play by London's rules. By 1800, the combination of credit, banking, and trade made Britain effectively the central node of the world economy. And armies? Fleets? Yes, they were important, but only because finance could make them possible. But even the cleverest systems have limits. By the early 19th century, Britain's financial dominance faced new challenges. Wars with Napoleon drained resources. Industrialization demanded capital. Global trade became riskier. Debt, once a weapon, could also become a chain. Britain's national debt soared to unprecedented levels, over 200% of GDP during the Napoleonic Wars. Investors grew nervous. Financial panics erupted. And yet, Britain survived. Why? Because of reputation. Investors trusted London. Credit systems were sophisticated. The government could borrow more than any other nation because the world believed it could repay, even after decades of war. It was a precarious balance. A misstep in finance could collapse empires faster than any invading army. Even as Britain expanded, cracks began to show. Colonies like India and Ireland were heavily exploited to finance London, but resentment brewed. Financial overreach, speculative bubbles, and uneven growth made the system brittle. The famous Irish potato famine of 1845 to 1849 was partly a financial disaster. British finance prioritized debt payments and trade profits over human survival. Banks profited while millions suffered. Attempts to fix the system were uneven. Reforms like the repeal of the Corn Laws in 1846 sought to modernize trade, but debt cycles and speculative crashes continued. Finance had conquered the world, but at a human cost that was increasingly hard to justify. By the early 20th century, Britain's dominance was waning. The United States, Germany, and France had industrialized, creating their own financial and trade networks. Even the mighty pound could not carry an empire indefinitely. Here's the most unsettling part. The patterns repeat. Today, the United States and other financial hubs dominate not by sheer land or armies, but through credit, debt, and global currency systems. Trillions of dollars move daily across borders. Bonds, loans, and investment flows dictate who can fight wars, invest in infrastructure, or survive financial crises. Consider this. As of 2025, global debt is over $300 trillion, more than 3 times the world's GDP. Financial influence now decides the fate of nations faster than troops or tanks. History isn't just repeating, it's rhyming. Britain's empire fell not because finance failed, but because human ambition and greed stretched systems to the breaking point. The same lesson applies today. Finance is power. Nations that control money, not just armies, can influence the world far beyond their size. Debt is a double-edged sword. It can fund conquest and growth, but overreach can lead to collapse. Trust is the ultimate currency. Britain's empire survived decades of war because the world trusted its financial promises. And the warning: empires may fall, not because of battles lost, but because of financial systems stretched too far, inequalities ignored, and human cost undervalued. So next time you hear about national debt, global trade, or stock markets, remember this: the power to shape the world often lies in numbers on a page, not swords in the field. If you want to uncover more hidden stories of history, finance, and power, hit that subscribe button and join us as we reveal the forces that really move the world. Because history isn't just in the past, it's shaping the present and your future.